Welcome to Follow the Money, where we look at how fraud actually works in practice and what it takes to stop it rather than just count the losses. My name's Dr. Nicola Harding, and today we are stepping into one of the biggest shifts that the UK has made on financial crime in years, and that's the mandatory reimbursement for victims of authorised push payment fraud or APP fraud. In 2024, liability for these scams was effectively redrawn overnight, changing who pays when the worst happens and what doing the right thing looks like across the industry. In today's session, we're going to ask three things. Firstly, what this change really delivered and what it cost in operational terms, not just headlines. Secondly, why moving liability doesn't automatically stop the crime. The money is still leaving the system and ending up in criminals' hands. And thirdly, with the EU now facing its own reimbursement and intelligence sharing rules, what European institutions can take from a country that's roughly 18 months further down the road. To explore that, I'm joined by two guests who've lived this shift from the inside. We've got Kate Frankish. Thank you very much for being here. She led the Confirmation of Payee from around 70 banks and payment service providers to more than 550 in a single year. And it has been the centre of the UK's work on reimbursement and fraud prevention. And Barnabás from Salv, whose work focuses on making collaborative intelligence sharing between institutions possible with real data protection constraints. This isn't a conversation about blame, it's about how we build the rails for the first time through real-time collaboration, so reimbursement becomes part of a prevention layer rather than a costly sticking plaster afterwards. So let's get into it. Thank you both for being here. I really appreciate this conversation. So Kate, before the reimbursement rules themselves, can you give people a sense of scale? You took the Confirmation of Payee from around 70 banks and PSPs to 550 in a single year. What does a jump like that actually take, and why did it matter for fraud and its prevention?
Okay, so first of all, if I just explain my role at that point in time in 2024 and 2023 and 2022, actually, it was a long time coming. So I was the Chief Business Development Officer of Pay.UK, who are the payment scheme operator for all of the different non-card payment types in the UK. And part of that role was also looking at fraud prevention and helping the participants of the schemes collaborate so that we could get better fraud prevention wherever possible. So Confirmation of Payee, that was born 6 years ago now in the UK. And it was actually first put in place for kind of fat fingers and money going the wrong way. So basically it was to stop misdirected payments, which was a large problem for banks. And particularly because with real-time payments like faster payment, once you sent the money, the person who's got it couldn't spend it. And there's no guarantee you're going to get the money back, even if they're not a fraudster, even if they're, a semi-good person, they're not bound to give you the money back. So that was the main reason for Confirmation of Payee initially. But then we discovered that there were a few different types of APP fraud that this helped as well, where, for example, somebody had changed a bank account detail to somebody who wasn't who they said they were, and people were sending money. So there's a few little MOs within APP fraud that Confirmation of Payee helps. But actually the biggest part that it played is another step in setting up a payment. So it makes the consumer stop and think before they do something. And whilst we all want payments to speed up and be really convenient in a lot of ways, there's a bit about putting a little bit of grit in the system that makes it safer, because most types of APP fraud are happening when fraudsters are putting consumers under a lot of stress. They're asking for them to do things quickly. So setting up a new Payee is one of those areas where put a bit of grit in the system, it makes consumers stop and think a bit more. And what was important about taking the 70 banks and PSPs in the UK up to 550 was, while 70 actually covered 97% of all faster payments in the UK volume-wise, the remaining 3% that the long tail of smaller organisations had were the smaller organisations who had less money to invest in fraud controls, both AML and onboarding, so potentially letting fraudsters in the door in the first place, and then on the prevention side. So ensuring that there was a standard that everybody followed and there were upfront payment checks that their customers did right across the UK allowed us to say, on all banks in the UK, to say, when you set up a new payment, we'll do this additional check. It does help make sure the money's going to the right person and that, some types of fraud are stopped as well. So it's become a hygiene factor in the UK. If you don't get the check, you're like, is there something wrong? And actually, again, people won't send money unless there is a check involved in the process.
We moved on then from kind of having this check, and the actual kind of scheme of works and the reimbursement rules changed in the end of 2024. It didn't go through uneventfully. There was quite a bit of pushback in the industry around potential unintended consequences. There was all kinds of these, what ifs, buts or maybes at the time. For anyone who only knows like the headline, what actually changed the day that it came in, and what was different for a bank on like the Monday versus the Friday before?
This was a policy born out of the PSR. What the payment systems regulator was trying to do in the UK was say, actually, everybody in the payment chain has to have some skin in the game. So the sender, the bank, the customer's bank who's sending the money, and also the receiving bank who's receiving the money, and often is where the fraudster sits to disperse the money quickly so that people can't find where it's gone and cash out. So really, a lot of the crux of the regulation was twofold. One was to make sure everybody, both sending and receiving, had some liability, because then that makes you stand up and actually do something differently. And the second part was to make sure victims were consistently reimbursed for their crime, because in 2021 was the highest, I think it was £490 million worth of APP fraud in the UK. And that was the first time actually non-card fraud exceeded card fraud in the UK.
And you already had instant payments that time, right?
Yeah, we've had instant payments for 17 or 18 years now in the UK, so a long time. Part of the regulation was, as I say, to make sure everybody had some skin in the game. But starting at a policy level is fine, and putting something down on paper. The practicality of actually putting that in place is far different. And Pay.UK were joyously given the challenge to put those policy rules into the faster payment rules. And then the faster payment rules are operational, practical rules to run a payment scheme, which was really tricky for everyone involved. And I'm talking about all of the participants in the UK as well, the banks and the PSPs, because the difference on a Friday versus a Monday was significant. And actually the operational uplift for everybody was the hardest part of this. Having a policy which has got clarity around £85,000 is the limit that can be paid back. You share it 50-50 with the sending and receiving bank. There's 5 days for you to solve the case, if not 35 if you stop the clock. But 35 is the absolute end game, and you can keep back up to £100 of every claim. They were the kind of key rules that were put in place. But actually, operationally, how does that work? And how do I, if I sit in a tiny little bank over here, how do I know Bob from the fraud team in Barclays, their phone number, and who do I deal with, and how do we communicate with each other really quickly to make sure that the case is dealt with? So there were two elements to this. So UK Finance, who represent most of the banks in the UK, already had a system set up for the voluntary scheme that was in place before this regulation. And also Pay.UK wanted to set up a communication system, a workflow system, so that every single bank and PSP, no matter what size, could use it, even those who weren't members of UK Finance. So there was two ways that you could get into the system and communicate with each other quickly. That was challenging in a lot of ways because our participants had to pay for the build of our system, and they also had to pay for operational costs within Pay.UK for a new regime of reporting to the regulator, all of these kind of things. And these things don't happen for free. They have to be funded. And also within their own houses, even where there are large organisations with big fraud teams, they had to change their processes significantly. They had to retrain their staff. They had to look at their internal fraud systems and do new workflows. They also had to work out from an annual budgeting perspective, what's this going to mean to me from a financial perspective? Now, with some of the bigger banks who were in the voluntary scheme and were paying back significant volumes of customers, actually, in some respects, it was sometimes a cost saving because the receiving bank was paying 50% of the money back. But it was difficult for everyone, and trying to corral and get everybody to collaborate, etc., is probably the hardest thing to do, and that Europe will be in exactly the same position. But I think, definitely a learning from it, from us within Pay.UK trying to do this, was actually get everybody up front looking at operational processes, and actually get some of the experts within the banks you work with, because they deal with it day in, day out, to actually lead some of the work streams, understanding what's happening and helping the wider industry understand what they need to do. Because any kind of payment scheme, it's a collaborative group. Everybody has to play by the rules or it doesn't work fundamentally.
No.
But it was a really big shift, and new processes, new systems, many more operators to begin with in banks just to make sure they had the coverage necessary to meet the timescales. And then a regulatory reporting cycle that they didn't have before. So quite a bit of heavy uplift.
I wanted to express my kind of admiration for this setup here that we are discussing UK and continental Europe, because the UK story was always like a few years ahead of continental Europe. So fast payments came actually, like you said, Kate, more than probably 14, 15 years before it became last October mandatory in the EU. And then fraud exploded in the UK, as you described, and then came Confirmation of Payee. And it's like the same story again and again. So Europe introduced also instant payments in a slow and then later accelerating way. And sometimes I have the impression, we don't learn from others.
Yeah.
Introducing fast payments without upping the defenses. This is what happened country by country by country, UK, but also if I look at other countries like Brazil, like India to some extent, where it is used for absolutely all kinds of payments every day. And Europe is now facing the same situation. So now instant payments is becoming more and more the typical form of payments, whether it is retail banking or also B2B, SME payments. And it's like as if we built a very fast motorway without the guardrails kind of on the side. And then we are putting them
You're putting them on
like
as you're building.
Step by step. Yeah, exactly.
There is one country who've actually learned lessons, and I did some consulting for them last year, and it's Payments Canada. So Payments Canada, their real-time rail is still not quite live, but as they were building it, they were building in a version of Confirmation of Payee and also real-time payments transaction monitoring capability at the centre, which we'll get on to. But basically, what we're going to talk about today is the benefit of data sharing, because you can't understand the patterns unless you see the full picture, and then you can't stop more fraud.
By the way, that's also a nice side effect, if you will, of what you introduced in the UK with Confirmation of Payee, because that's also a kind of communication that was not there before between the two parties of the same transaction. So this is, of course, not what we usually understand under the full scale of data sharing based joint actions, but this is a step in the right direction in terms of two banks will kind of have a system that checks the two sides of the transaction. So that's absolutely in line.
Any regime that we have, though, is costly, as you alluded to, Kate. There's huge changes in processes. My understanding of all this is that the burden, and we often talk about, is the burden falling on the payment providers. So the split 50-50, because we focus on the losses, but actually the transformation that's needed within the bank or the PSP is huge, rather than telcos and social media platforms where a lot of the fraud originates. How do you think, particularly at the time and leading up to the changes when it was anticipated and we didn't really know necessarily the impact that these changes were going to have, and maybe reflect on how it was then and how it feels now? But what do you think the industry feels about the financial services taking the weight of this problem?
They're pretty angry, generally. And I saw that quite rightly, kind of day by day. It's a really hard problem to solve because there aren't many countries who are looking to take Meta to court, are there? Or to, bring down or have strict regulation that can bring in to play the massive tech giants. But that does need to change. And I think more and more, certainly in the UK, the government are more involved now, and there's a couple of ministers who look after fraud and financial crime. There are more groups getting together and collaborating in the UK than ever before. There are more solutions which look at the downstream signals that come from telcos and social media companies. So I'm quite an optimist, but I do think that this will have to change, because otherwise, fraudsters are very organised businesses globally. You're never going to get in front of them, but even to try and keep up with them, there needs to be the knowledge and the signals, which all come from data, shared in a really careful way, because everyone is worried about data privacy. That's the biggest problem in getting any of these things off the ground. But unless you actually do that in a controlled manner and get the whole of the industry to actually collaborate, then we're not going to ever get anywhere. We might talk a bit later on about a proof of concepts that we ran in the UK. And actually, my vision was always, imagine you could get all of the payment system operators globally to link up and make sure that data of some kind was shared so that you could trace fraud and you could stop it, because fraud's a very much a global game. It doesn't stick within one jurisdiction.
And I think it's very much in line with the European Union vision, because as we discussed, EU is kind of a close follower to the UK on many things, payments. And here, data sharing will be part of important regulatory packages on AML and on fraud and scam. And there is this vision which is a pragmatic vision actually of the European Payments Council, that let country-based information sharing initiatives, information sharing partnerships start or continue in some cases, because some of them are operational since years, and let Europe try to do what you said, Kate, create a overarching layer where then you connect up these initiatives without, destroying what's already there. So you don't kind of fix a problem that doesn't exist in many countries, but in some it's still open. So you create an overarching layer and you try to move towards having a European kind of data sharing layer supported by EU-wide regulation that is kind of uniform for all EU countries. The global vision will take, of course, longer, but I agree that step by step. And also, I wanted to hear you, Kate, because you also advocate that it should be cross-sectoral as well. However, there is this notion also on the continental side that we start with banks because they are so heavily regulated and so concretely regulated that that's the first step, and then we broaden it up. Do you follow this logic also, that would you recommend a country that starts new that they should start with banks and then take on social platforms and others?
Yeah. Because practically that's the easiest way to get anything moving, Barnabás. Whether it's right or wrong, doesn't really matter. Anybody you speak to, even when I spoke to lots of data protection lawyers from our UK banks, everyone agreed at a principle level, everyone wants to do more to stop fraud. But when it came to the nitty-gritty of how is that structured, what does it look like, that's where it gets hard. But there's definitely willingness to collaborate. And we should probably learn from the card schemes, because, they have network-wide fraud detection capability globally, and they're pretty good at doing that kind of thing and making sure data doesn't leak, etc. So there are lots of, like any innovation, you should look around at what's there already and think about how do you apply that to a different use case.
Absolutely. I spent some years working in the card payments industry before I joined the crime fighters. And you're absolutely right. The challenge I see it is that instant payments or fast payments is in most countries inherently a domestic initiative. Yep. And of course, in the EU, you can call the Eurozone one domestic payment area. So that's why in a pragmatic way, we start with the same market or jurisdiction, which is covered by instant payments, and then have this long-term vision, like you mentioned, that at one point there will be not only cross-border within that market, like let's say European Union, but there will be also cross-regional. And of course, for Europe, one of the key corridors of that more global linkage is European Union UK corridor, and that's how we are already operating UK European Union cross-border data sharing at PII, so personal information level. And this is really valuable because UK being such a powerhouse of payments innovation, that of course brings also its risks. So for the EU, definitely the EU-UK corridor should be the priority once we got our act together here. Within the EU.
And there's a parallel here because lots of global payment schemes are already setting up connections. So I don't know if you know about Nexus in Asia with Singapore, Malaysia, others joining their payment schemes so that cross-border payments are easier and cheaper to do and quicker. And I can only see that growing across the globe, but it's exactly the same kind of connections as you would want to look at from a financial crime and fraud perspective.
Yeah, and I hope we do it in a more synchronized way.
Yeah, because there's
Before
lots of
huge
different
volumes start
experiments.
flowing
Yeah.
in at the pace of real-time payments across big markets, we up our defenses the same way, so that information sharing and joint investigations between banks who are looking at the same transaction will also be possible, so that we learn from the example of UK, we learn from the example of Europe, where also fast payments was introduced faster than fast crime fighting in many countries. So now we are kind of catching up, putting up the defenses.
The things with starting with the financial institutions is that you're starting at the end of the problem. So before we kind of move upstream more so with the data sharing, which is kind of moving it closer to the criminal event rather than the criminal payout, I just want to focus, I guess, or spend a little bit of time thinking about reimbursement, because that became the big headline, right? Is that the 50-50 reimbursement. And I think in doing that, it allowed us to put a figure and metrics around, what the cost of fraud should be without really examining what the value of prevention might be. So reimbursement makes the victim whole, which is good. We want victims to not suffer and do anything that we can. It doesn't actually stop the fraud. It's not stopping the harm of those interactions even. And if you've been made financially compensated, it doesn't change what's actually happened to you. And it still leaves money coming out of the system and into criminals' pockets. We've already kind of discussed about who's absorbing the losses, which is inherently here at the financial services level. But I guess within these rules, when we've got such obvious rules, we always find either that displacement where the kind of harm will move and it'll shift and it'll try and adapt around what's being put in place. I guess one of the biggest examples of that is like money mule accounts. But what for you did adaptation look like in practice? And was there a worry that any of the rules had created their own workaround?
I suppose the biggest concern that the UK industry had before the regulations went live was unintended consequences. So if you're a consumer, you know you're going to get your money back, and a guy down the pub says to you, send this money to me and you're going to get your money back. Tell your bank it's fraud. You're going to get the money back from your bank and I'll give you 10% on top. Not everybody would do that generally, but there are people who are really struggling financially, and something like that seems like a victimless crime in that case, because it's the banks, and everybody thinks banks. Yeah, everybody thinks banks have the biggest pockets in the world, but what people don't realize is the costs come back to them, whatever. It's a cost to the country that you're in, and it's actually normally the fraud rings are funding other types of really horrific crime. So there's always cost involved. And there are new types of fraud also emerging. Again, probably trying to think the last time I heard of any from my contacts in the industry, but fraud is always going to adapt to the easiest route to actually make, as much money as possible in a shortest period of time. So the rules and the policy is not bulletproof. I agree. It's part of the solution, but not the full solution. Because as you say, Nicola, what it does is make the victim whole, which is great. But it actually, one of the things that really stuck with me is we got a group which is run by the police in the UK called Action Fraud to come in and speak to the team who were developing fraud tools in Pay.uk. And they explain the calls that they get from victims and the lasting harm to them from a mental health perspective for things like romance fraud, where you feel like you've been double duped. You've had all of your savings taken, but you've also felt that you were in love with somebody and you thought they were real, and you found out that you must feel massively stupid and very heartbroken as well at the same time. So, whatever can be done further up the chain to stop the crime from happening in the first place is where we need to get to. So there's what can be done at the end of the bank where cashing out happens and how you put better controls in there, and the banks are able to stop more fraud and to let real payments go through without being stopped and worked. But further up the chain, there needs to be more activity as well, so that there's a better solution overall.
There's a full-on layered approach, isn't it, that's required, that is around even like that cultural kind of awareness point of, like you said, most people wouldn't do it, or you would hope that they wouldn't. I think there's a lot that we can learn from the card payment providers and the schemes around what they've had to deal with. And there's you could maybe point to, and I think at the time when this was about to be implemented, it really was highlighted as being such a risk of that kind of activity. I was doing research around it myself at the time, and it was a really strong narrative. But when we look to the card payment providers and the schemes, they're facing chargebacks of a similar level, if not, growing even more.
Yeah.
Kind of dubbed almost like friendly fraud, where people will, like, that culturally we kind of think, well, I haven't had a refund from my bank for a little while. Maybe I don't want to pay for that, takeaway I ordered last night. I'll just say it was fraud. I think probably less so in the UK, but it's definitely an emerging problem, particularly the easier you make it for someone to make that claim. So like in the US, you can just press a button in your banking app and get that chargeback done very quickly. So I think there's, like you say, wherever there's a will, there's a way. And culturally, the awareness isn't just this is what fraudsters might do. It's actually this is what's acceptable and what's not acceptable. So that layered approach stems right from, how we think and talk about fraud culturally in our society, right through to the end of whether we reimburse victims or not. There's a whole kind of spectrum.
And there's an education piece for consumers, which, lots of organisations are doing really well, actually. And you hear it yourself. But still, as a really savvy person, some of the kind of ways that APP fraud is being committed today, like deep fakes, you would be taken in. If I got a phone call from my daughter, thinking it was my daughter, saying I've been in a car crash, I'm using somebody else's phone, can you send me money? I'm stuck. I would do it because I would be worried about her.
Yeah, there is a scam for each of us, even for the professionals. I was wondering, because again, EU is going to follow the reimbursement logic in a, let's say, constrained way, but carved into law, into the PSR from 28 onwards. And my thinking or assumption is that it would create a business case for investment in financial crime fighting, be it within bank investment, the upping of transaction monitoring systems and stuff like that. And of course, the big new thing will be for many countries that are not yet practicing this type of bank-to-bank, peer-to-peer data sharing and joint screenings, joint investigations. Do you see already this effect that banks, beyond, of course, complaining and seeing in a absolutely understandable way the risks around reimbursement schemes, but was there a wave, or is there a wave of extra investment and attention to fraud mitigation?
Yeah, and leading, for the couple of years leading up to 2024, there was an awful lot of investment, predominantly because of the spike in fraud you'd seen before, and also the knowledge that this regulation was coming. One of the challenges is, and I'm seeing this because I work with a fintech, that, one of the ways to try and stop fraud, it still doesn't stop everything, is to make sure when you're onboarding a customer that you've got really strong anti-money laundering and fraud checks at the start of the onboarding journey. But you also don't want to discriminate against some consumers who don't have 6 months worth of salary slips or salary going into any form of account, or
debanking discussion.
Debanked people, So how do you balance that so that organizations can, or so that people can take part in a digital society, which everybody really has to do to send and receive payments these days, but also you're not banking criminals. So that's one challenge at one end. And I think from a investment in different tools, there is appetite. The challenge is getting to speak to the right people within the organizations to actually explain. And there's loads of brilliant tools out there and loads of different ways to do this. But there is appetite to invest and to actually do more, not just like a one-off and then actually fraudsters move on and their MOs move. Actually, if you could get a solution that learns, as loads of things do with AI machine learning today, and moves with the fraudsters so that there's not the need for heavy integration on an ongoing basis into new tools, etc.
And I think it's a great example you mentioned with onboarding and debanking risk, because if tools are not only getting more powerful, but also smarter in a sense that banks are able to use the collective intelligence when assessing the riskiness of a person in the onboarding process. That's exactly one of the use cases we are running since years in our core market here in North Europe. We already had like more than 200,000 queries where one bank was able to query the other banks on the market, whether the person in the onboarding or a repeated customer due diligence process was already flagged by another bank as suspicious for money laundering or fraud-related issues. And that's a kind of smart defense.
Yeah.
So probably it increases the chances of getting rid of the bad guys without increasing the problem of debanking in certain socio-economic groups. So I really advocate that defenses have to be not simply more powerful and putting more AI and more this and more that, but smarter, so that we use the collective intelligence here.
I think there's particularly when it comes to data sharing, we tend to think of it at the point of payment as well. But I think the ongoing KYC or like dynamic KYC is a really good point of when we routinely do those checks, and that should be happening anyway, to be able to share that with, potentially linked bank accounts. I'm sure all of our bank accounts know which ones are us, but in a different bank, with the way in which we move money and things like that. So being able to share data intelligence, even at that, random KYC check that you get every now and again, at those points is really key, because obviously account takeovers and all these different MOs, anything. I've always been a huge advocate for switching things up, for making it as random as possible, which is obviously very difficult in a very rules-based environment to say, change it every single time. It's almost what you need to be able to outstep the fraudsters. And, we can't quite get there, but we can, when with that randomness is there, being able to share that is a potential very valuable source.
Our statistic confirms the need for that type of smart collective action. On the market where we are running this joint screening for customers, our facts show that about 20% of those persons flagged as suspicious have been flagged by multiple banks, which means exactly what you mentioned, Nicola, that the bad guys are multi-banking, riding on this easiness of digital onboarding in the age of online banking. Without collective action and collective screening, we will be always kind of putting banks in a very difficult situation if they are fighting alone. So that's clear learning from the markets where we operate at Salv.
Kate, I just wanted to ask you, in 2024, there was a proof of concept which included 7 UK banks, 3 fraud prevention vendors, and 13 months of faster payments data, which was analysed in a 3-month window. That there was a nearly 50% uplift in detection. What can we learn from that proof of concept, and what do you think still stands now, nearly 2 years later?
So I suppose there we were trying to prove the hypothesis that if you had more data, you'd find more fraud. And, realistically, we knew that was true, because it's just analytically the case. But to prove it, you have to prove things, don't you? And actually, the hardest part of that was to get the data out of VocalLink, who are the infrastructure that sits behind Pay.UK, and get it safely to the vendors for them to test, etc., under very strict rules and regimes that the banks who were involved in the proof of concept wanted put in place, quite rightly, because it's their customers' data. So, it proved, because we used the data plus the banks put on the fraud flags, so where they had experienced fraud, and then the companies ran the models and found around 50% more fraud than had been detected by the banks with their current systems. It's a case that shows data sharing is needed to be able to actually identify and stop more fraud. The trouble with actually putting that into production was getting agreement to who could actually do that. What kind of company could all of the payment providers in the UK trust to hold that much data in a secure way, etc. So, I think data, masking PII and things like that has moved on significantly since then even. So there are, and I think Salv has some solutions in that place. What we were asking at that point of time was, could everybody, all of the participants in the UK, jump into one system that would allow the data to be shared centrally with a fraud prevention provider, and for them to pass signals back on top of what the banks already have to add more accuracy to what they were doing. And I just don't think the banks were ready at that point in time. That's not to say it hasn't changed. And I think, there will be a solution that works in that way. And Visa and MasterCard have some form of real-time payment solutions that they provide to the market. But there are lots of other really interesting solutions. And in the UK, nothing has taken off for the majority as yet. Everybody's buying their own.
And in our experience, what helps to solve that situation where everybody is strategically agreeing but operationally not able to move, because essentially it's a coordination problem, like you mentioned, who would be the one that connects all the players. And what we see in Europe is that it really helps if there is an industry level kind of consortium builder or coordination agent. And on the continental side, it's very often the bank association that brings the banks together, maybe first not all of them, but let's say the ones that are responsible for the majority of the transactions. And that bank association gets the mandate from the member banks to embark on this journey and to select platform. And most importantly, is to develop together with the platform partner like Salv and the banks the playbook, the consortium level governance, because I don't see it as a technical challenge anymore. I mean, the security layer is available since years, pseudo-anonymization, and all these techniques are fulfilling the GDPR requirements for data privacy if and only if the governance layer is designed in the right way. And this governance layer works the most effective way when there is a central coordination. So it's not bottom up, but it's like, I wouldn't call it top down, but there is a kind of governance structure around. So we work with a number of bank associations around Europe in this way, that we actually have most of our discussions around the governance, how to use a standard fraud typology, how to set the implementation in a way that fulfills the GDPR requirements for data minimization, data retention, constraints, and all these important GDPR requirements. And then the technical implementation is relatively straightforward.
I remember at the point of, well, not just one, but on multiple occasions being in a room talking about data sharing and talking about the proof of concepts and how this might go, solutionizing of how this may go forward. And the term that was used was data swamp, which is not a very attractive term, but this idea that all of our data is in this swamp that people can just pull from, and it sounds messy and it sounds disorganized. And I think
very likely not GDPR conform on the European Union side.
Exactly. And I think this is the difference between how often data sharing is talked about and imagined by the people who are in the position to be able to make it happen. If we are using terms like data swamp and all our data being in there, it seems very risky, not something we want to do. Yeah. But then we need to flip that aside and think about data sharing in infrastructure, because that's how we secure things. We have strong, robust frameworks and we protect our infrastructure, right? If we think about critical infrastructure as a whole. And I think often having words like data swamp conjures up an image, whereas infrastructure means, how does it work?
Yeah.
Tell us, and the shift I've probably seen in the last year to 2 years is moving from, we just can't do this. It's dangerous. It's lurking in the shadows. It's scary. Over to, okay, what does it actually look like? That's where Barnabás, you've been really helpful. So I'm going to ask you to be helpful again and say, you walk us through intelligence sharing and how that can minimize data. And where it can't. If we think about data sharing as infrastructure, there's markets where you can screen against real identifiers like IBANs. Isn't an IBAN personal data? How do you ensure that infrastructure is intelligence sharing and that it's safe?
Honestly, I don't even like the word data sharing, because what ultimately matters is joint action that banks can take together collectively or in the relevant pairs of the two sides of a transaction, and data empowers this joint action. But what matters is that they are able to take joint action with the speed that is required in the use case. In the use case where it's a joint screening of persons, whether they are having the the bad reputation of being suspicious for money mooling or something like this, then of course you have to be able to act within, seconds if it's a digital onboarding process. With an IBAN screening, you have to be in the time window of the instant payment transaction.
So milliseconds.
Exactly. And a joint investigation of a suspicious transaction should not take more than minutes, because after a few minutes, after half an hour, 1 hour, the likelihood that the bad guy will start layering the money and moving it to further accounts is much, much higher. So to set up the data sharing in a way that it enables exactly these type of joint actions. And in our experience, it is possible to do it even in the European Union with the very strict data privacy rules if you set it up with the right governance structure. So instead of shying away from the GDPR discussion and creating very expensive, very complicated technical solutions that actually make the joint action much more complicated, if not outright impossible, our recommendation is to deal with the GDPR question, but deal with it the right way. Set up data sharing and the joint actions in a way that has a privacy designed in approach, which means, for example, that there is a governance layer and the governance documentation at the level of the consortium of the banks that are embarking on this journey that clarifies how, for example, the data minimization requirement of GDPR is concretely implemented in the operational use case. In our case, for example, we are designing already the fraud typology and the user interfaces in a way that only the data that is agreed to be shared for a concrete fraud scenario is shared, not more and not less. So that's like GDPR compliance built in. Or we pay attention to the logic of why fraud is a legitimate reason for data processing under GDPR, which means that we take the approach that, for example, for the joint investigation, there is a suspicion behind. So the suspicion that triggers the joint investigation and data sharing, and we avoid exactly what, Nicola, you mentioned, this type of data swamp stories, which usually lead in a regulatory catastrophe. I mean, this was the case of the Netherlands, for example, in the first generation before with TMNL, that they somehow didn't get it right in terms of the governance structure, and it was stopped. It had to be stopped. We are running data sharing based joint action, like you mentioned, in Latvia and other countries since 5 years, and we never had one single kind of regulatory backlash because we designed in privacy from the beginning, and we had also the regulators involved from the beginning.
Yeah. Which is a good way to do it, getting regulators in the camp.
So, Kate, if I come back around to you, banks have to identify where funds went within 5 days. And the UK Finance Fraud Scheme is moving into Pay UK, so institutions can collaborate on cases. Is that collaboration infrastructure the real lesson for the EU coming out of this? That reimbursement only works if you build the rails for banks to work together underneath it?
Yeah, definitely. I just don't see how you can work significant volumes of cases unless you've got a tool that allows you quickly and easily to identify who you need to speak to in that other organisation, and that you can pass information securely again between each organisation to work the fraud within the timescales. So there has to be some form of directory workflow type capability. And actually, if you think about VOP and what that does, VOP is fundamentally a directory for Bank A to speak to Bank B when a customer is setting up a payment. It's kind of the same logic for this type of activity, but with, I think, again, if it's regulatory driven or even rules based, there has to be workflow included, which allows an operator in Bank A to be able to put the right information in at the start and make sure that they can get the case moving quickly, and for the operator at the other end to understand what checks they have to do and what information they have to give back. So that's quite a key learning, and something we probably underestimated in the UK, how hard that would be to do, how much it would cost to build, and I suppose how long it would take, although we did manage to smash it in the timescales just, which is why I've got so much grey hair now. But anyway.
I'm going to ask you both for one thought each on what this looks like moving into the future then. So, Kate, if you could tell the people who designed the UK scheme one thing before they'd started that you now know, what would it be?
Certainly, the policy is fine and the outcomes that regulators are looking to deliver are fine. But unless you can get it in the front of operationally what that's going to mean to everybody who has to adhere to that policy and regulation, then it means everything's back-ended and it's really difficult and problematic. You need to bring that operational impact to the front when you're thinking about putting a policy in place, and getting experts from a selection of the organisations who are impacted to help you with that work is the only way to do it, because they know what it means from a day-to-day basis.
Brilliant. And Barnabás, for the EU institution that wants to get ahead of this rather than react to it, what's their best first move?
I would say take GDPR and consider what it says, that fraud is a legitimate reason for data processing, and take a mentor, take an experienced supporter for your journey of embarking on enabling joint action, because waiting for the regulation is slowing you down, and fraud will explode in the meantime. So get ahead of the curve, get ready, and it will help you when the regulation is there, that you are compliant from day one.
Thank you very much, both. Today we've heard that mandatory reimbursement in the UK did something important. It made victims whole and forced institutions to take the liability seriously, but it also exposed the limit of liability shifting as a strategy. Fraudsters adapted, money mule networks routed around the rules, and the money continued to move. But the hopeful part of the story is what happens when institutions do collaborate. A proof of concept that brought together 7 UK banks and 3 fraud prevention vendors showed almost a 50% uplift in detection when faster payments data was shared and analysed in real time, even though operational and data protection challenges stopped it from simply being switched on as a business as usual model. For the EU institutions now facing their own reimbursement and intelligence sharing frameworks, the lesson is clear. Reimbursement on its own is not enough. Infrastructure that lets banks work together, see where funds are going within days, to share signals intelligently across borders and privacy regimes is the prevention layer that turns rules on paper into fewer victims in practice. Many thanks to Kate and Barnabás for bringing the reality of that work to the table and for being honest about both the trade-offs and the possibilities. If you're listening from an institution that wants to get ahead of this rather than react to it, the question now is not whether reimbursement is coming, but what kind of collaborative systems you start building before it arrives. This has been Follow the Money. Thank you for listening, and we'll see you next time.